Everyone. Welcome to the Office of the Treasurer and Tax Collector's webinar on Proposition M, Business Tax Reform. While everyone is welcome to join and learn about Prop M, please note that today's webinar is tailored to focus on what small businesses need to know. Before we begin, here's some basic information on today's webinar. Today's webinar is being recorded. By default, all participants will be muted upon entry and video is disabled. You can type questions at any time using the Q&A section by selecting the Q&A button at the top of your screen. We'll answer as many as we can at the end, and we will follow up with you if we can't get to your question today. To enable closed captioning, go to your meeting controls at the top of your screen and select More Actions, then Language and Speech, and then Show Live Captions. What is Prop M? Prop M is a comprehensive restructuring of San Francisco's business tax system, approved by voters on November 5th, 2024. So why Prop M? Here's how we got here. With San Francisco's business tax structure facing challenges after the pandemic, city leaders asked the treasurer, controller, and chief economist to review the city's current business tax structure and develop recommendations for reforms. The passage of Proposition M followed years of collaboration among San Francisco leaders who engaged extensively with the business community to understand challenges and priorities. Recommendations stemming from that work were to promote greater equity for small businesses, simplify the overall tax structure to achieve greater predictability for both businesses and the city, reduce risk of tax loss from remote work and business relocation, and reduce volatility stemming from over-concentration of business taxes on a small number of payers. Now let's get into the details of Proposition M. We'll start with a quick look at our agenda for today's webinar. We'll begin with a review of the changes to tax and fee deadlines. We'll then review specific provisions that small businesses will want to know about. If you're a small business operating only in San Francisco, this section is for you. Some people may want to drop off once we're finished with this section, but you're welcome to stay and learn more about our business tax system. We'll then go in depth in our review of key business tax reforms to the gross receipts tax, including reviewing updates that generally impact larger businesses, like those that have gross receipts within and outside San Francisco. We'll then review the changes that Prop M made to other business taxes. And finally, we'll wrap up with the Q&A. All businesses in San Francisco renew their business registration each year. Before Proposition M, this deadline was May 31st. When you previously renewed, there were also different fee schedules depending on your business type. If your business had more than $2.25 million in San Francisco gross receipts, you also needed to file annual business taxes like the gross receipts tax. Those annual business taxes were due on February 28th. One of the goals when recommending the business tax changes was to simplify the tax structure for businesses. So starting in 2026, there will be one deadline for the business registration renewal and annual business taxes, such as the gross receipts tax, the last day of February. This deadline is for all businesses, regardless of size. This means the upcoming 2025 business registration renewal will be the last under the old deadline and will cover just 9 months to transition to the new deadline. When you renew your business registration in 2026, you will also see one simplified business registration fee schedule. Prop M also increased the small business exemption limit for the gross receipts tax to $5 million. This means that unless you are a lessor of residential real estate, when you renew your registration, if you report that your business had $5 million or less in San Francisco gross receipts, you will not have to pay or file the gross receipts tax, overpaid executive gross receipts tax, or the homelessness gross receipts tax. Before you finish your February tax filing in 2026, we will show you if you have any active licenses in the city and if you need to pay anything to renew those for an additional year. Before Proposition M, businesses with regulatory license fees from the health, police, fire, entertainment, public works, or cannabis departments received an annual bill from our office in March. This only applies to certain businesses that need permits and/or licenses to operate, such as restaurants, bars, and massage establishments, to name a few. As part of the process to create Proposition M, we saw that these license fees primarily impacted small businesses. Once Proposition M passed, policymakers decided to eliminate $10 million of these license fees for businesses. Approximately 91% of restaurants and 87% of nightlife businesses will have their annual license bill fully eliminated and will not owe license fees. Currently, a mid-sized restaurant pays at least $1,400 in license fees each year. This change will put that money back into the pockets of a restaurant owner. Many other small businesses will also benefit from fee elimination, including retailers, supermarkets, and food vendors, to name a few. This will take effect in 2026. We'll now review how two sample small businesses are impacted by Proposition M. Keep in mind that these are simplified examples of hypothetical businesses, and you shouldn't rely on these examples for purposes of calculating your own taxes. This first example shows how Prop M reduces taxes and fees for a small restaurant. Flasco's Restaurant is a small business that operates solely in San Francisco, delivers no food or services outside San Francisco, and has annual gross receipts of $6 million. Flasco's filed its gross receipts tax for the 2023 tax year, which is before Prop M changes took effect, in February of 2024, and owed $12,105 for the gross receipts tax. They paid $644 for their business registration fees for the 2024-2025 registration year. And at that time, there were no Prop M related savings on taxes or license fees yet, so they owed $2,121. When Prop M is fully implemented in 2026, Flasco's cost will drop to $10,050, to the significant savings of nearly $4,800. This includes $9,250 in gross receipts tax for tax year 2025, which is lowered due to updated rates, $800 business registration fee for the 2026-2027 registration year, and $0 in license fees, which will be fully waived due to Prop M for this example. The second example is for a retail store. Sally's Boutique is a small retail store that operates solely in San Francisco, makes no sales delivered outside of San Francisco, and has an annual gross receipts of $3 million. Sally's filed its gross receipts tax for the 2023 tax year in February 2024 and owed $2,055. They paid $515 for the business registration fee when they renewed their 2024-2025 registration year, and their license fees were $103. Because of the changes under Prop M, Sally's total obligation will drop to $1,885 when they file in 2026 for the tax year 2025. Prop M increased the small business exemption to $5 million. Because Sally's Boutique's annual gross receipts are $3 million, it will be exempt from filing and paying the gross receipts tax. The business registration fee will be $1,885, and there will be no license fees for Sally's Boutique because the license fees applicable to this retail store will be waived. Sally's Boutique's total obligation for 2026 will only be the business registration fee of $1,885. Now it's time to dig into the details of how Prop M changes the gross receipts tax and other business taxes. If you are a small business, these changes might not affect you directly right now, but it is still worth being aware of them. Changes that impact larger businesses often ripple through the entire business ecosystem and can influence conditions for everyone over time. One of the biggest changes with Prop M is that it reduces the number of business activity categories for the gross receipts tax from 14 to 7 to simplify the tax structure. Additionally, Prop M changes apportionment rules, which is how businesses determine taxable gross receipts. We'll review this in more detail in the coming slides. Prop M also revises the base of taxpayers who will pay the homelessness gross receipts tax to businesses with San Francisco gross receipts in a business activity category over $25 million. This means that someone mid-sized businesses with San Francisco gross receipts in a business activity category between $25 million and $50 million will now file and pay the tax, even though they may not have had to file and pay the tax previously. It also makes major changes to the overpaid executive gross receipts tax by exempting many more businesses, making the tax targeted to only large businesses. And Prop M significantly lowers the rates for this tax. With new tax rates, threshold, and exemption levels, businesses should review their approach to estimated quarterly payments, which are due on April 30th, July 31st, and October 31st of each year. Quarterly payments are based on a number of factors, including whether the business filed tax returns for the previous year. Some don't because they're small and are not required to. How much the taxpayer reported on the taxpayer's prior year's return. How much the taxpayer paid as a requirement of requesting an extension to file the taxpayer's prior year's return, the tax liability shown on the taxpayer's current year return, and the taxpayer's actual tax liability for the current tax year. In addition to structural changes, Prop M also changes the filing extension deadline to submit an annual business tax return to November 30th to more closely align with the state and federal tax deadlines. Before we review the changes to the gross receipts tax included in Prop M, we'll start with the basics of the tax and how it works. First, what are gross receipts? Gross receipts generally means the total amounts received or accrued by a person from whatever source derived, including but not limited to amounts derived from sales, services, rent, interest, and dividends, among other sources. San Francisco taxes gross receipts that are attributable to the city, so we must figure out what's attributable to the city. These receipts are also referred to as San Francisco gross receipts. In simple terms, determining San Francisco gross receipts means figuring out how much of a business's total receipts San Francisco can tax. For businesses that are only operating in San Francisco and generate all gross receipts from business in the city, all their gross receipts are San Francisco gross receipts when calculating the tax. Most businesses with gross receipts within and outside of San Francisco determine their San Francisco gross receipts generally by using a method called allocation and apportionment. For example, gross receipts from the sale of an item of tangible personal property are allocated to the city if the item is delivered or shipped to a purchaser here, and gross receipts from services are allocated to the city if the benefit of the service is received here. And gross receipts are apportioned to the city based on a calculation that considers the relative payroll the business has in San Francisco as compared to its payroll outside the city. Prior to Prop M, San Francisco gross receipts were determined for many businesses using either 100% payroll or 50% sales and 50% payroll, depending on the business activity. Once San Francisco gross receipts are determined, tax rates vary based on a business's San Francisco gross receipts and business activity category. With our gross receipts tax review in mind, let's now look at some of the changes Prop M made to the tax. For businesses with gross receipts both within and outside of the city, Prop M shifts how many businesses calculate their San Francisco gross receipts. Moving forward, most businesses will determine San Francisco gross receipts using the following calculation: 75% based on allocation of the gross receipts to the city, for example, receipts from sales of tangible personal property delivered to customers in the city, or from benefit of the service which is received in the city, and 25% based on payroll apportionment, based on their relative payroll in the city. Prior to Prop M, there were multiple calculation methods depending on the business type, with a more significant focus on a business's relative payroll in the city. Prop M now has one method for most businesses and shifts the focus to allocation of receipts to the city and away from relative payroll in the city. The goals when this change was recommended were to simplify calculations and make them more predictable, no matter the type of business, reduce the risk of businesses relocating outside of San Francisco and encourage businesses to keep staff and payroll in the city, and reduce the risk of tax loss from remote work. We know this is complex, and our office is committed to providing clear and comprehensive instructions and guidance to businesses as we implement Prop M. Additionally, regulations are being finalized and will be released in the next few months. We'll wrap up our review of the gross receipts tax by going over some additional and less complex changes. As we covered earlier, the small business exemption ceiling is now $5 million. Prop M also reduced the number of business activity categories from 14 to 7. Each of the 7 categories includes a description of the business activities and related codes from the 2022 North American Industry Classification System, or NAICS. This is a national standard used in classifying businesses. Reducing the number of business activity categories helps simplify the tax structure for businesses. With fewer categories, it becomes easier for a business to determine their category or categories and therefore the tax they owe. For an example of a category, you can see a description of business activity listed under Category 3. For a full list of the 7 categories, their business activities, and the tax rates, visit sftreasurer.org/PropM. We'll also include this website at the end of this presentation. In this section, we'll review some of the other changes, business taxes, and Prop M. Prop M revises the base of the homelessness gross receipts tax by changing the threshold from $50 million in combined gross receipts to $25 million in San Francisco gross receipts in a business activity category. For businesses leasing commercial space in properties in the city, Prop M sets the commercial rents tax small business exemption at $2,325,000. This means that if you are a small business with gross receipts from commercial rents of $4 million, you will not be required to file the gross receipts tax, but will continue to be required to file the commercial rents tax. Prop M also made major changes to the overpaid executive gross receipts tax. Businesses are now exempt if they meet both of the following conditions. They have 1,000 or fewer U.S. employees and $1 billion or less in gross receipts reported on their federal income tax returns. This significantly narrows who is subject to the tax to large businesses. Prop M also includes a major reduction in rates, cutting the tax to about 10% of what it was prior to Prop M. Our office recently made available 2 components of Proposition M implementation designed to provide a greater clarity, certainty, and opportunity for voluntary compliance. The Voluntary Disclosure and Compliance Program offers unregistered businesses the opportunity to voluntarily disclose and pay unpaid taxes and interest for the previous 6 years in exchange for a waiver of penalties for the 6-year look-back period, and a waiver of taxes, penalties, and interest for periods prior to the look-back period. The Advanced Written Determination Program is intended to provide clarity and predictability on issues related to tax apportionment and business activity classification for businesses in San Francisco. This program allows a business to request a formal written ruling from the city on how a specific business activity should be classified for tax purposes or how its gross receipts should be attributed to the city. This helps ensure that a business understands its tax responsibilities before it files, reducing confusion and disputes. By providing clear upfront guidance, the program helps businesses make informed decisions and fosters a more transparent and fair tax environment. Moving on to Q&A. We received many questions both during the presentation and in advance. Many were addressed during this presentation. We have recorded all the questions we received in the Q&A today and will continue to post answers on our website. The next slides will highlight a few questions we received in advance of the webinar. The first question is, will other taxes for small businesses be increased to offset the loss in collections from Prop M? No. Small business taxes can't increase unless there is another ballot measure. Relief for small businesses was a primary goal in the city's tax reform recommendations. The next question asks, previously we used a two-factor apportionment method based on relative payroll within the city, weighted 50%, and where the product is delivered, or the benefit of the service is received in San Francisco, weighted 50%, to determine San Francisco gross receipts. Will this still be the case with Proposition M? No. In the city's tax reform recommendations, the method of attributing gross receipts to the city changes for most businesses. Under Proposition M, for most businesses, the new calculation is 75% based on sales allocation and 25% on relative payroll. This change shifts the focus toward the market for the business's gross receipts and lessens the focus on where workers are located. The next question is to clarify whether the business registration renewal process will remain separate from the annual business tax return filing, or will these two filings be consolidated going forward? Starting in calendar year 2026, the business registration renewal and gross receipts tax filings will be due on the same date, the last day of February. The form is being designed now, but it will be a seamless experience.
Hi, everyone. Thanks so much for joining. I know this is a lot of information. My name is Amanda Freed. I'm the Chief of Policy and Communications in the Treasurer's Office. I'm going to do my best to answer some of the questions that have come in live through the Q&A process. And if you haven't had a chance and you have a question, please feel free to drop it there in the Q&A. There are some questions that are coming in that are very specific to certain industries and certain businesses. And if I'm not able to answer it here, we are capturing all of your questions and who's asking, and we will be sure to get back to you at a later time. But I am going to start with the most common question that is coming up, which is, will the slides be available for us? And absolutely, we will make this presentation, the slides and the recording of this webinar available on our website. And we're happy to send an email out to everybody who registered when that's available. We'll also be translating this into English and Spanish and Chinese to make it easier as well for folks who speak other languages. So want to start off there. And then the next question that I got I'm going to hit publish and hopefully people can see, is if an entity has $5 million or less in gross receipts only in San Francisco, do they need to make estimated payments? This is a very good question that I'm going to answer in a couple of parts. So as Hafiza mentioned, $5 million will be the new small business exemption threshold, which went into effect January 1st of this year. Generally, businesses with 5 million or less in gross receipts will not have to pay the gross receipts tax. The biggest, I just want to point out that that doesn't apply to every single business. If you're a lesser of residential real estate, that exemption threshold does not apply to you. So I wanted to put that one caveat out there. But generally, if you have less than $5 million or less in San Francisco receipts, you will not have to pay estimated payments. But as you just heard, the process to figure out what a San Francisco receipt is still pretty complex. I think Prop M made it more simple, but we really encourage you to do the work to figure out, especially if you do business outside of San Francisco, if you have customers outside of San Francisco, really be careful to correctly go through and allocate and apportion your receipts. To make sure that your overall receipts don't exceed this $5 million small business exemption threshold. But in general, let me just go through and take this opportunity to explain how the estimated payments work. And again, this is only for businesses with more than $5 million in San Francisco receipts. It is based on the lower of 25% of the liabilities on your 24 business tax filing, which was the pre-Prop M rules. Or 25% on your 25 business tax filing, which will follow the Prop M rules. So you can pick whichever is lower between those two. We want to just point out that the difference from the old system to the new system is going to mean that for some businesses, they're going to think if you just sort of follow based on what your 24 receipts are, you're going to maybe just reflexively pay those estimated payments, and they may be incorrect. So it's really important to double check and consider that before you start paying money that potentially you don't owe us, or the reverse, underpaying and then have an unwelcome surprise at the end of the year. So we do have some information on our website about calculating this, and we will be reaching out we sent information out if you receive a quarterly tax bill with the email notice to pay those quarterlies with a little bit of an explanation of what to look for, but did just want to point that out. Let's see what else is coming up here. Okay, can you describe how the gross receipts tax calculation would apply to a construction company wherein materials make us a significant portion of the cost of work and therefore the gross receipts? So that is a complicated question. Generally, I'm not going to get into too many specifics for each industry, but I want to point out that when policymakers were considering how to create the categories for the taxes, they did take into consideration the differences between different industries. And so construction, for example, is alone in category 7. So there is a set of rates that apply to companies operating in the construction field, which I think generally the intent is to take into consideration some of your fixed costs and the ways that your business might operate differently than other industries. Let me see what else is coming up here. So I got another question around quarterly payments. Currently, we do make quarterly payments and then pay the remainder of taxes owed on the annual reconciliation at year end. Will it be the same in 2026? As I just described, the rules are generally similar. It's 25% of the year prior or current year. However, because there are such big changes afoot, that's why we're all here today, what you owe may actually be quite different for this tax year versus last tax year, particularly because of some of the things Hafiza mentioned with the changes in the way that the homelessness gross receipts tax is calculated now. Some businesses will be seeing that for the first time. Similarly, the overpaid executive gross receipts tax rates have decreased significantly. So it really is important to take a look at that so you don't overpay or underpay during the year that we're in right now. Will there be a mock or soft calculation using data from the most recently filed return, applying the new changes made available? We are doing our best to put out as much information as we can ahead of the first time you'll file your gross receipts tax under Prop M. So we already have a great website, which maybe one of my colleagues can remind us in the chat where to find that. It'll also be on the last slide today, explaining the changes with a number of sample businesses profiled. So you can see some of the changes broken out by industry. We'll continue to try to add information and context, but your questions really help us figure out what we're missing. So if you aren't seeing what you need to see, please do reach out. You can call 311 and ask a question. It really does get to us. We look at every single one of those. Or you can drop a Q&A in today and we'll take that and make sure to continue to update. Okay, and then the next question I see is the annual business tax return going to be combined with business registration renewal, or will they remain as separate filings but with the same due date of February 28th? This is a great question. Our aim is to make this as easy as possible for you to get in and get out of our tax filing. We know it's nobody's favorite time of the year. So when you come in on February 28th, we are still very much in design, but our goal is to ask questions up front to make sure that we're very quickly ascertaining whether or not you are within the small business exemption. So if you are a small business and the only thing you need to do is renew your business registration, we want to get you in and out as quickly as possible. If you are over that threshold or you're a lesser of residential real estate, we're going to continue you through a flow. You may owe a variety of taxes. So there's the general gross receipts tax, the homelessness gross receipts tax, etc. And so we will, like we have now, it is separate but related. So we're doing our best to have a unified experience, but also want to make it very clear to you what you owe for each separate tax. We also understand that for some businesses, there are different people in your organizations that are responsible for filing and paying different components of our taxes. And so we will continue to make sure to allow that, that ability for you to do that. Great. And then the next question I see is the NAICS code or category that my business filed in last year does not appear to be in the list of the 7 new categories. Is the best way to determine which category we should file in to request an advanced written determination? I would encourage you to look at the 2022 NAICS categorization really carefully, find out where you were. We did update it based on the 2022 NAICS code. So there are a few, but not very many changes. And we're pretty sure that we covered every single category into our new combined categories. So if you're not seeing it, you can submit a help desk request from our website or call 311, and we can try to navigate you through that sort of NAICS landscape to find how to connect it. If you're truly not seeing it, yes, you can certainly request an advanced written determination, but I would encourage you to take a closer look before you do so. And then I see a question about the estimated payments cannot be modified for increase in tax rates. Will San Francisco waive underpayment penalties? There are not underpayment penalties currently for our estimated payments, so we have nothing to waive there. And then, okay, question coming in. Are remote employees considered San Francisco employees? The important thing there is to consider where the person is working from. So if you are working from San Francisco, then you're generally considered a San Francisco employee for that day. But please do check in with your tax professional. There are some some complicated rules there, but generally it really depends on where the work is happening, where you're physically located. Let's see. I am seeing a bunch of questions about construction, which I just want to say we will aggregate all of these questions around construction and get back to people with the answers to everybody asking about this. And I think I'm going to consider having a separate call perhaps just for that industry, because I certainly see a lot of questions popping up. I'm not going to go too far into the details here for everybody else on this call. And then I see a question, if we end up filing for the gross receipts tax and then have gross receipts of $5 million or less, will there be a notification on the website that will tell us that we are exempt and don't have to file? I think that's a great suggestion. Our goal is really to start with that question up front and kind of only feed you into the gross receipts tax filing if you are subject to it. However, we don't want to stop anybody from filing. If you believe for some reason that you need to file the gross receipts tax, we're never going to stop and not receive a filing at all. But we will do everything possible, particularly since this is new and there are so many changes, to really prompt you and ask, are you sure you want to file this? It looks like you're under the exemption threshold. But we'll certainly add that into the queue as we're starting to design the form and make sure that we remember to really guide you along the way as much as possible. And then... So sorry, you guys are asking really great questions. I'm trying to get through here as much as I can for everybody with the questions that I can answer. Okay, one question I see here. I'm trying to go through. Okay, I think I have answered most of what I am able to answer here on the spot. Please, continue to send them in. And again, we will get back to you with anything that I wasn't able to answer today, and particularly on the construction questions, we'll aggregate those and send those out as well. I see here a question coming up about how will the gross receipts tax estimated quarterly payments be computed next year by the system? Prior to Prop M, it was based on the gross receipts tax return filed. However, if we file at the 11/30 extension due date next year, how will we know the amount to pay quarterly? That's a great question. I think we're also working through that internally as well. We've tried to make it as easy as possible for you, just using your tax filing data to sort of throw a number into the system for you to pay. We're going to have a lag now with some companies choosing to extend until November. But of course, you will still know what you filed the year prior to that and the current year. So you will have some information at your disposal, but it will probably be a bit more of a manual calculation on your end to figure out the appropriate amount to pay. And then when you list the dollar exemption level for the CRT tax, which is the commercial rents tax, is that the dollar value or rent revenue? Generally, when we are giving amounts out, we're talking about gross receipts in a total amount, but we can clarify that and make sure it's very clear on our website what that amount refers to. And then I see a question, are you able to provide full calculation breakout of the examples you give online, not just the total amounts owed? Sure, I think that's a great suggestion. I'm happy to take that back and see what we can put out. We're always trying to balance making it comprehensible, but it seems like maybe we need a little bit more information so you can follow along with our math and really kind of understand all of the inputs. So we can take a stab at that and try to add some additional information on our website for examples. As we get closer to the filing, we'll also, do more of this, and we'll have, really detailed instructions about how to calculate the new taxes. And then I got a question, if we pay estimates and end up under the threshold, will we need to file to receive a refund? Our current practice is automatically refunding if somebody overpays or pays estimates and then they don't need to file. Part of the challenge there is sometimes we don't know if you were supposed to file and you didn't file. And so we may follow up with you to actually file because you paid estimated taxes. And then when you file and we see that you're below the exemption threshold, you will receive a refund. I know that can feel frustrating sometimes to businesses, but it's just a challenge of the way that we receive filings. And so it's really, sometimes hard. We can't read your mind. And so we won't have the information necessarily to know that you're below the exemption threshold until we receive your registration renewal. So we'll do our best to automate wherever possible and get you your refunds as quickly as possible. And if for some reason we can't, please do look out for communications from us. And please, of course, bear with us as we all go through the transition together. So we're changing our systems and our practices, and we're, going to try to provide as much grace as we can to you all through the process and appreciate the same on our side. And truly your feedback is really helpful to us as we do this because we're deep in the design phase right now. All right, so your wonderful questions are starting to slow down. To my team, if I've missed anything that you think I should answer, please let me know. Otherwise, I'm gonna just wait a few more minutes and see if anything else comes in. Hafiza, perhaps you want to go on to the next slide just to give people the wrap-up information, and then I can stay on for a couple more minutes and see if anything else comes in through the Q&A.
All right, great. Thank you, Amanda. And yeah, that's all for today. Thank you for joining the PropM webinar. We hope this webinar helped you understand PropM. As a reminder, a recording of this webinar, as well as translated PowerPoint slides in Chinese and Spanish, will be available on our website, sftreasure.org/PropM. Thank you and have a good afternoon.